Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius and Anucauskas. Today's the 25th of February 2019, so welcome everyone. Welcome to this Monday's afternoon session where we're going to have a look at the markets, a few of the charts, the usual stuff, yep. But before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then guys, let's jump into the charts. Now the first one I want to touch on here today in this session is oil. Now looking at oil is getting hit today, and basically that's after Trump released its after he tweeted which was directed to OPEC, saying that the oil prices are a bit too high, and you can see that the reaction here that we're having right now, a nice slide to the downside, breaking some key support areas. Of course, initially breaking this 56.77 zone approximately there. The next one being the little small obstacle around the 56.30, and this is where it found its support near the 55.70 level, from which it kind of reversed higher, but you can see that it's kind of struggling to overcome this S2, which is around the 56.20 zone. So let's keep a close eye on that one. Certainly this now kind of shifts the short-term outlook more towards the negative side, especially if we're going to start seeing a break below the 55.70 level right here. So you can see that how well here in the recent past, how well this level played out as a nice area of support, from which kind of the commodity rebounded and pushed higher. So of course, for now, like I said guys, all eyes are on this little area of support around the 55.70. A nice good drop below that could potentially send this commodity lower, initially aiming for the 55.20 area, but slightly below that we do have the 100 EMA here on the 4-hour chart. Of course, looking at this one, we do have the 100 EMA here shown as the green line, which also could in a way maybe stall the price for a little bit temporarily, but if the selling momentum is going to remain strong, then yep, further declines, maybe even going actually all the way towards the 54.75 or even the 54.20 zone, so which is around here, because that you can see how well that played nicely, how played nicely as an area of support here back on the 15th of February, and also played its role as resistance back on the 13th of February and also the 7th of February. So for now guys, long story short, basically keep your eyes on this little level right here around the 55.70, and nice good drop below that could potentially send this commodity to a little bit lower. On the upside, well, if this suddenly, let's say, decides to travel back up here and starts moving back above the 56.30, but actually gets and closes the day above the 56.77 level, now this could in a way mean that the bears are not ready to take control of this commodity, and WTI, basically we could see this one maybe traveling further up here, but potentially going all the way back towards the today's highs, which are near the 57.50, and a nice good pop above that of course could send this WTI a little bit higher here, and we could then start targeting higher highs. But for now guys, this is where we are. This is where the commodity is stuck near the S2, which is around which is around the 56.20 zone. Let's see, like I said, let's see where it wants to actually travel further. But for now, what we're going to do is, of course, we're going to keep a close eye on some of the key resistance and support levels. And I'll repeat myself again here. On the upside, we're keeping a close eye on the 56.77 area, approximately there, and on the downside is the 55.70, where the where WTI found its support and from which it kind of rebounded recently, so, or should I say today. So yeah, that's why, guys, for now, be very cautious with this one. And let's see where this is going to end up going. Jumping into another commodity, or should I say more precious metal, and that's platinum. Now, looking at this basically, this is quite interesting because I was covering this one in one of my videos last week. Basically, I was telling you guys to keep a close eye on this 831 level, which got broken nicely, and our next target was the around 850 level, which which was reached, and it was reached today, and yep, we had a nice overshoot here. Of course, now it kind of stalled here a little bit just above that 850 level. Of course, if this decides to travel back down and, let's say, closes the day below the 850 level, certainly we could see maybe a bit of a correction back down. The only thing is that what you could keep an eye on is this little tentative upside support line. And let me just quickly put that on the chart, and there we go. This is what I'm talking about. So in a way, you could keep your eyes on that one. So we could see maybe a bit of a retracement back down towards this upside support line. Of course, even if this gets broken, still we're going to keep a close eye on this 831 level, approximately there. You can see that how well it played as a good area of resistance back here, well, quite recently, of course, and also back in the beginning of February and also in January. So this now could be that quite important new level of support that we're going to be keeping a close eye on. So for example, even if, let's say, this if this steep upside line gets broken, we could see maybe a move of something like this, where the precious metal could continue traveling lower, but if it fails to drive below the 831 level, I mean, this could potentially be a nice area and a nice area for the bulls to step in again and potentially drive this one back up again. So, but for now, of course, this is just an idea. First, let's say let's see what it wants to do with the 850 level today. If it wants to remain above it, then we could target the 860 level. Now, just to kind of show you that the 860 is also quite an interesting level here to keep a close eye on, and that basically marks the inside swing low of the 5th of November here. So a good potential area where the holdup could occur, but again, it's only if we're gonna stay above the 850 level. For now, basically, guys, we could see at some point, we could see a bit of a retracement here back down. Like I said, keep your eyes on this little short-term steep upside support line, tentative one a little bit, of course, but still keep your eyes on that one. If it fails to withhold, the bulls shouldn't probably get disappointed too much, because, like I said, we still have this 831 level that could play out nicely in their favor. But if we see the precious metal dropping below that, and especially closing the day below that, then, well, this could turn out to be a bit ugly for the buyers, and we could see this one traveling further down back towards these levels that we saw here in the middle of February. So for now, guys, we are more positive than negative, but still we could see a bit of a correction here back down. So let's keep an eye on the price action. Jumping into EURCHF. Now, this one, just wanted to quickly run through this one. Basically, I was talking about, well, this is something that we threw out on TradingView here on our account. You can check us out here. You can kind of follow us, and this is what we threw out on Friday, basically showing that something for you guys just to keep monitoring, this little nice descending triangle, and you can see that now it managed to break it to the upside. So of course, of course, this is somewhat looking more bullish, but the only thing is for us, what we've mentioned here on Friday, still for us, in order to kind of consider much higher levels, we would like to see a nice good push above the 113.70 level first, and then we'll target higher levels. For now, even though yes, we did have a nice break here through the upper side of this triangle, but still, for a better confirmation of the upside, we would like to see a nice good push and a break above the 113.70 level, and only then we'll target areas like the 114.10 or the 114.44, approximately there, guys. So for now, guys, like I said, it is looking more bullish than bearish, but again, let's wait for that confirmation break. Let's say just in case this decides to reverse lower and drops below the 113.35 area and travels all the way towards this 113.10. Now this is where it will become very interesting to watch, because if this gets broken, if the lower side of this triangle gets broken, then yep, guess what? I mean, further declines are possible. Jumping into Aussie dollar. Now Aussie dollar is having a nice run, fantastic run to the upside here today, almost managing to reach its key area of resistance around here, around the 0.7183 level, approximately there. Now basically a nice good push above that, of course, could open the path towards this slightly higher level, which is around the 0.7205 area. You can see that how well it played here back on the 20th of February, and also it also held the rate from moving higher here back on the 30th of January, but only temporarily in that day. I mean, it was the intraday swing high here. So, and also it played a nice role of resistance beyond the 28th of January. So basically for now, guys, we are keeping a close eye on this level right here around the 0.7183, 84, something like that. But if this gets broken, the next obstacle on its path is the 0.7205. But if that fails to withhold the bulls, then yep, further acceleration to the upside could be possible towards this downside resistance line. And just let me show you what I'm talking about here. So this downside resistance line has been running here from the high of the 6th of June. Now it's a bit of a tentative one, I do understand that, but still something for you guys to keep an eye on, and let's see if that actually plays out. But for now, certainly we did have a nice push higher. Don't get me wrong, we could see a test of this 0.7183 area here, and or even let's say the R2 here, which you can see. But we could see maybe a bit of a correction back down, and then another push higher if, of course, the pair fails to drive kind of below this little area right here. Let me just quickly put that on the chart. Now this is what I'm talking about. So this little area of potential support here, there we go. Around the 0.7150 level, approximately around there. If it fails to drive below this, then yep, we could see a rebound and a push higher again. So for now, guys, keep your eyes on the 0.7183, 84, something like that. If it struggles to travel higher, we could see maybe a bit of a correction lower. But if it kind of struggles to overcome this barrier here, then yep, we could potentially see maybe more bulls jumping in here and driving this pair higher. On the downside, well, for us, let's say to start looking at slightly lower levels, we would like to see initially a drop below the 0.7120 level. This way, of course, we could target these recent lows near the 0.7080 level, but if that fails, then yep, further declines could be possible. So, but of course, we'll just keep it short and simple for now. This is what we're looking for in terms of the downside. A drop below the 0.7120 level could send this pair a little bit lower here. So keep your eyes on down. GBPUSD. Now this one is a very interesting one because it's currently stuck here between these between these two levels. On the downside is the 130.25 area, approximately there, and on the upside is the 130.90. So we do have a few overshoots and undershoots here, but basically it is still trading above the pivot. Now if this decides to travel above this 130.90 level, now this could be a nice signal for more buyers to jump in here and potentially drive this pair towards the the 131.60, which is the high of the 31st of January. This could be a nice potential good area of resistance, but for now, guys, we are going to remain somewhat more neutral and just wait for that confirmation break, either through the upper side here through the 130.90 level, or in terms of the downside, if we see this one traveling below the 130.25, certainly there is another good potential area of support. Let me just get rid of actually this line. It's no longer relevant, but we could, like I said, we could start targeting the 129.60, of course initially aiming for the psychological 130 level, but slightly below that is the 129.60 level. Good, very good potential area of support, which marks the high of the 13th of February. So keep your eyes on that one, but again, like I said, in order to kind of aim for lower levels, we would like to see a nice good drop below the 130.25, and then just for maybe a better confirmation, a drop below the psychological 130 level. This could do the trick for the bears. So keep your eyes on that one, and let's see how this plays out. But for now, like I said, for now we're slightly more on the neutral side. Jumping into last pair I wanted to quickly touch on, and I'm gonna wrap it up for today, and that's NZDCAD. Now, looking at this pair, certainly from the bigger perspective here, you can see that it's still stuck within this little range, or well, maybe actually not a very little one, but still stuck within this range here, between the 0.8915 level on the downside and the 0.9110 level on the upside. Now, it failed to drive and test this lower side of this range, and now it's kind of trying to push higher, currently sitting near the R2, which is around the 0.9072. If this continues to drive further up here, now like I said, there is a good chance we could see maybe a retest of this 0.9110 level. Keep your eyes on that one, but if that fails to withhold the bulls, then yep, we could see maybe finally a break through this range. But again, we cannot really talk about that yet until we see this pair traveling closer to the upper bound of this little range that we've got. So for now, guys, we are going to, within this range, we are still kind of more on the bullish side, but again, like I said, anything could happen. We could see maybe a strong reversal back down here, and if we do see a drop lower, and if we start seeing a drop below the 0.9030 level, then we could then target these recent lows. These recent lows around the 0.8945, but if those fail, then yep, we could retest this lower side of this range. So for now, guys, long story short, keep your eyes on the downside, keep your eyes on the 0.9030 level, and on the upside, if this R2 gets broken, then which is around the 0.907273 level, if this gets broken, then yep, we could see further acceleration to the upside, where we could retest the 0.9110 level, which is the upper side of the range. Okay, guys, I hope you found it useful. Thank you very much for watching and listening, and if you want to join me tomorrow morning at my Trader's Espresso, and that's 7 o'clock GMT time, but for now, I hope you have a wonderful evening, and I'll see you tomorrow. Thank you very much, and bye-bye.